I'm absolutely sure by now that in your home search, you've probably seen a bunch of different loan types that are out there, but you probably don't know much about USDA, VA, and FHA loans. So this video today is all about those. Stay tuned. First, we've got FHA, and FHA is a Federal Housing Administration loan guaranteed by the federal government. You can put as little as 3.5% down if you have a FICO score of 580, or 10% down if you've got a FICO score of at least 500. So an FHA loan is ideal for folks with a lower credit score or lower income. This is something you'll want to keep in mind. Even if you can't get approved for a conventional loan, you most likely could still get approved for an FHA loan. USDA loans are our next one we're looking at. This stands for the United States Department of Agriculture. These are loans ideally for people in rural areas. One of the benefits of these is they usually have lower rates than a traditional conventional mortgage, and like FHA loans, you can typically put very little down, sometimes as little as zero. One of the benefits of these versus conventional loans is even if you don't put, say, 20% down, PMI is most likely not going to be something you're going to have. These tend to be few and far between because the biggest requirement, which is also the biggest downside, is that you have to find a property in a USDA approved area. So we've talked about FHA loans, we've talked about USDA loans and how they're very similar. Our last one is VA loans. Now this is loans done through the Veterans Administration for current or former service members and their spouses. What you're going to see here is typically no percent down in terms of a down payment and lower interest rates than you would see with a conventional mortgage. So here's 3 quick bullet points if you want to qualify. Number 1, you're an active duty military member or veteran with at least 90 days of service during wartime or 181 days of service during peacetime. Number 2, you served in the National Guard for at least the last 6 years or at least 90 days on active duty. Or lastly, you're the surviving spouse of someone who died while on duty, either killed in action or still missing in action. One note here, the VA does not set a minimum credit score requirement, but lenders may set their own as they wish. So there you have it. These are 3 kinds of loans you may want to look into if you fit the criteria. They're not as well known as conventional loans, but for many could be a great path to home ownership. So whether you're interested in one of these or the conventional route, we would love to have you, love to hear from you. Reach out. As always, our contact info is below. Keep thinking Nashville, keep thinking Brad. We'll see you soon. Cheers.